Hey guys, Spencer Coffman here with the Internet Hustler YouTube channel. Today we are talking about personal lines of insurance when it comes to protecting your assets. Welcome to the Internet Hustler YouTube channel. My name is Spencer Coffman. Today we are talking about protecting your assets with personal lines insurance. So what does this mean? Well, there's another video here on how to protect your assets that goes over a bunch of different ways that you can protect yourself. This video is specifically through the use of insurance as that role. So what is it? Well, through your personal lines insurance, now let me explain what that means. It means having insurance for yourself, not for your business or something like that. This is strictly like home insurance, auto insurance, and like an additional umbrella policy. We're not talking here about things like disability insurance or long-term care insurance, life insurance, critical illness insurance or injury insurance. All of that is different. That is a great way to protect yourself because if something happens, you're covered. So we've hinted at them a little bit in like a life insurance video. You can check that out in this card right here on a video about life insurance policies and what you should do. In addition, we might in the future, as time dictates and if people need it, we might go into this other insurance that would be important for you to have. Probably will, so I'll just say check it out in a card up here about long-term care, disability, and critical illness insurance. We'll talk about that in another video because that's a great way to protect yourself as well. But for this specifically, it's really protecting yourself against lawsuits or against someone coming after you. So through personal lines. So number one is check your car insurance. Now a lot of people say, I don't want to pay $100 a month for my car insurance. I want the cheapest thing possible. I want the lowest thing possible, whatever, etc. Okay, that's fine, but then what are you doing with that extra money? So if the top of the line policy is going to cost you $150 a month or $200 a month, and you say I want the cheapest, I'm paying $50 a month, what are you doing with that extra $150? Are you blowing it or are you investing it? You better be investing it, because if you're not going to pay for something up here, then whatever you're paying for, that difference, you need to be doing something smart with that money. So be putting it into some other type of investment. Now, that's just what I'm saying. I'm not your financial advisor, and you're your own person. So if you want to go to the casino with that other money, or you want to take a vacation, or you're buying $5 coffee at Starbucks every day, that's up to you. But financial education, and if you want to set yourself up properly and have your money work for you, then if you're not paying here, you're paying here, that difference you should be doing something with. So what should you have for insurance? Now, I'm going to tell you this. I used to be an insurance salesman. I used to sell personal property and casualty insurance. And so I'm going to say that based on my experience, now, I haven't ever had anybody come after me. I haven't caused any 10-car pileups. I haven't done anything. But based on my experience, my training, my education, and what it costs, I'm going to say for you, you should have good insurance. Now, what does that mean? It means, number one, that you should really have full coverage on your vehicle. Insurance agents all over are loving me right now. So if you have a vehicle, full coverage. What is full coverage? It is both collision and comprehensive insurance. Why should you have that? Because you want to protect yourself. You get into a fender bender that you caused. Do you want to have to pay for those repairs? No. Let your insurance take that risk. You run your car into your mailbox. That's your fault. That's your mistake. It didn't harm anyone else. Do you want to pay for that, or do you want your insurance company to pay for that? I'd rather have them take the risk. Of course, do the math, because maybe to add on comprehensive coverage is not worth the price, but do a break-even analysis. Say, okay, well, and same with your deductible. What's your deductible? $1,000 deductible means that you have to pay $1,000 for anything that happens, and then they kick in after that. Generally, I like a lower deductible, $250, $500, usually maximum. Why? Well, because if the difference is only $20 a year, let's say it's $50 a year, that would be 10 years before I would break even on that $500. Okay, if the difference is $50 a year, that's only like $5 a month more to have a $500 deductible than a $1,000 deductible. Chances are something is going to happen within a 10-year period. If your break-even analysis is 5 years or less, then question it. If it's more than 3 years, really, if it's 3 years or less, question it. Most people are going to get into some type of a bump or a ding or a fender bender, or something is going to happen, a windshield's going to break, something is going to happen within a 3-year period. So if your break-even analysis is more than that, it's worth having that lower deductible and letting your insurance company take on that extra risk. Now, what are your limits? Policy limits are something, this is where it comes to protecting yourself. This is policy limits of property damage, liability, things like that. So if you know the prices of vehicles right now, they're super expensive. You got a brand new pickup truck and you're driving maybe something that's 20 years old and your car might be worth $10,000 and you crash it into this new pickup truck and you got to replace that. Your insurance company has to replace that. Well, if you have cheap insurance and your limits are 2550, meaning personal injury and then liability of $50,000, that truck probably costs $70,000 and your car costs $10,000. What does that mean? Well, that would mean that you have $80,000 in damage just to property, and if someone got hurt, then you have that. Well, you only have up to $50,000 in coverage. Who's going to pay for the extra 30 grand? You. So have limits at least 300,000. Most states have 100,000, 300,000 as their legal limit. I would say that you should go higher than that, like 250, 500, or you can just bump it all the way up and do a 500 across the board, an even coverage, blanket coverage over it all. But for sure, bump those limits up. The difference in cost between a 100, 300 plan and a 250, 500 plan is probably only going to be like another $50 to $100 a year, maybe up to $200 a year. I mean, it's not that much. So your break-even analysis to get another $250,000 if something should happen is way worth it. In addition, if you cause an accident, you're probably going to feel bad enough already. If you cause a 10-car pileup and the damage is in the millions, or you get someone injured, you're going to feel bad about that. And knowing that you have insurance that's going to cover and take care of them is a lot better than saying, I didn't have the adequate insurance, and now they're going to start coming after you. They're going to garnish your wages. They're going to take anything that they can that you have to cover that loss. So you don't want that to happen. Just stay away from the headache. It's worth the extra few $100s a year to pay for that. The next thing that you should do, so first, make sure your limits are enough. Make sure they're high. If you have wealth, if you're broke as ever, then you're probably not watching this video, because you got to start figuring out how to make money before you start figuring out how to keep your money. And you also need to get smart with your money so that you start making it and keeping it rather than spending it everywhere. So you're probably the person that has the cheapest insurance and you're blowing that extra money rather than spending it. If that hurts your feelings, good, because then you got to make a change so it doesn't hurt your feelings. So adequate limits are very important on auto insurance. At least $300,000, a 100-300 plan, preferably a 250-500 plan, or even a 500 all the way across. The next thing that you should have is a great liability policy on your home insurance. Now, what does that mean? Well, chances of your home hitting or causing some other problem somewhere is a lot less than auto. And so really the only thing that could happen on your home is someone comes over and they get injured and then they sue you. And so what do you need to have? Well, if they get injured, most home policies are just going to pay for the injuries, and they're going to say, no, you don't get to sue us for pain and suffering or damages or anything else. So just make sure you have enough there. How much is enough? Generally about 300,000 would be a good amount. If you want to bump that up to like $1 million, you can. The cost difference is minimal, so speak with your insurance agent about that. The next thing you need to have, if you have stuff to protect, is an umbrella policy. So if you have a good net worth, or you have things that you want to protect, or you don't want your wages garnished for the next 20 years, get an umbrella policy. This is over and above those limits. So if on your auto you've got 500,000, on your home you've got, let's say, 500,000, and something happens at your home, someone slips and falls and it's going to cost $1 million, well, you got 500,000 plus you got an extra million, so you're good. You cause a 10-car pileup and it costs $1.5 million, well, you've got a $500,000 limit there plus the extra million in the umbrella, you're good. So that extra umbrella policy is very, very minimal, usually a couple $100 a year, maybe a few $100 a year. And to get $1 million in coverage if something were to happen, I mean, that's a lot of years to break even if you ever had to pay out of pocket to cover $1 million and you're only paying $200 a year. So these are very, very cheap ways to protect the stuff that you're working so hard to earn and to keep. So if you have any questions about it, please comment below. I have a pretty good knowledge of the insurance, but I'm not going to keep up to date with it all because I'm not a licensed agent anymore. I used to do it, and to get that, you need a lot of hours of continuing education to maintain it and to keep it. So it's a lot of training, and based on my knowledge, that's what I believe is a good way to do it. Of course, your situation could be different. So if you have any questions, comment below. In addition, feel free to share this video with your insurance agent or with your friends or your family so that they know a little bit more about what types of insurance they should have. Someone who complains to you about how insurance is expensive and they only pay for this, and they're only paying $20 a month or $50 a month, send this over to them and say, hey, open your eyes a little bit and understand, you know, what is your policy compared to what your policy should be to protect yourself. And this could help them a lot. It could help save a lot of money down the road. It could help save you a lot of money down the road. Of course, you're going to pay a little bit more in premiums, but if something happened, it's good to know you have that peace of mind. So again, any questions, comment below. Feel free to like this video, subscribe to the channel for more videos, because we've got a lot more videos on how you can keep your money and how you get your money working for you. So like, subscribe, comment with any questions. Until next time.